Morning, everyone, and welcome to Yahoo Finance. I'm Alexis Christoforous. If you've been watching us over the past few days, you know that we've been broadcasting from our homes here at Yahoo Finance as we do our part to try to have social distancing and also try to flatten that curve during this pandemic. We want to thank all of you for joining us and for going through this with us. We have a lot of information to bring you this morning. We're going to start with some positive news. Stock futures are rallying across the board. NASDAQ futures up better than 2%. S&P and Dow futures up about 2% right now. And that's because the Federal Reserve just a short time ago unleashed a slew of programs to help the stock market as well as small businesses. And we want to get right to it with Brian Cheung, who was just on a call with the Federal Reserve for all the details. Brian?
Hi, Alexis. So the big news from the Federal Reserve coming this morning before the market bell, we did hear that there was going to be a lot of changes with regards to their asset purchase program and quantitative easing. So they did say that they will be suspending guidance on their pace of asset purchases. Keep in mind that they had been previously committing to $500 billion of U.S. Treasury purchases and $200 billion of agency mortgage-backed securities over the coming months. They said they will just buy whatever the amounts are that are needed to make sure that the economy can withstand the shock of the coronavirus. A few other things that's worth mentioning. These are very in-the-weeds programs, but I'm going to try to walk you through it. They committed to buying corporate debt. This is investment-grade corporate debt through new liquidity facilities that are backed by the U.S. Treasury. These are new facilities that we actually have not seen before. So it's not the same playbook as 2008. This is going to be primary market and secondary market open purchases. And in some cases, as is the case with the secondary market, they'll actually be buying corporate debt ETFs as well. It has to be eligible for the program, but they will be taking on those ETFs. Again, something new that we have not seen from the Federal Reserve before. And then they also said that they would be reopening what they call the term asset-backed securities loan facility. This was something that they used in 2008. This would take on repackaged things like auto loans and student loans. But another big headline from the Fed is that they said, in addition to what they announced today, they will soon have the establishment of what they call a Main Street business lending program. They said it'll resemble something like the Small Business Administration loans that are being offered right now. Regardless, the Federal Reserve says all these things are necessary to support the economy. A quick quote I want to read to you. They said, while great uncertainty remains, it has become clear that our economy will face severe disruptions. Aggressive efforts must be taken across the public and private sectors. So the Federal Reserve saying in their third emergency meeting that they need to act to support markets as the turmoil continues. Alexis?
All right,
Brian,
thanks very much. Brian, did you have a question for Brian Sazi? Did you have a question for Brian Cheung?
Yeah, Brian, we've seen a big turn in the futures. We were limit down. Now we're surging in the pre-market here. Does this remove liquidity risk in the markets? Because I think a lot of investors right now are thinking that's the case.
Well, that's the effort that the Fed's been undertaking for the last 2 weeks or so. They've announced a number of other different types of liquidity programs, like the commercial paper funding facility, like the primary credit dealer facility. These are all things that are supposed to support the underpinnings of different types of markets, whether or not that's U.S. Treasuries or corporate debt in this case. But it seems like the market reaction today seems to be a positive idea, not necessarily because of the technicalities of what's going on in these programs. These are very in the weeds kind of things that most people who are watching this program might not really understand or be familiar with. But what we do know is that these are new tools. The Federal Reserve has never targeted corporate debt in a way like this before. The Fed has never outrightly purchased corporate bond ETFs before. I mean, the next question is, what more can the Fed do? And I think that when the Fed opens up its playbook and says, look, we don't have the same tools that we had in 2008. We can get really creative here and do whatever it takes, not necessarily using those words, but do whatever we need to do to support the economy. I think the market reads that as a positive sign.
Yeah, all right. Thanks very much, Brian.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.